Good morning, everyone. Today we're about to explore something that touches nearly every corner of the globe, whether you realize it or not. The US dollar is more than just cash. It's the world's most important currency. It's the backbone of international finance, the currency that countries and companies trust when making big deals. Think of it as the superstar of global money. No matter where you are, chances are the dollar is playing a role in the background, quietly influencing prices, trade, and even your own wallet. Most international deals, from oil to electronics, are done in dollars. When countries buy and sell goods, they often settle up in dollars, even if neither side is American. This global demand is why its value matters everywhere. When the dollar moves, it sends ripples through economies, affecting everything from the price of bread in Egypt to the cost of a car in Germany. When the dollar is strong, Americans get cheaper imports and better travel deals. Your vacation abroad suddenly costs less, and foreign gadgets become more affordable at home. But it also makes US products pricier overseas, which can hurt American companies. Factories may struggle to sell goods abroad, and workers can feel the pinch if exports slow down. The dollar's value is a balancing act with winners and losers. For every shopper who benefits, there's a business that faces new challenges. Today, the dollar is getting stronger against other major currencies. This isn't just a number on a screen, it's a shift that can change the course of economies and impact millions of lives. This isn't random. It's often triggered by decisions from the Federal Reserve or Fed. When the Fed raises interest rates or signals changes, investors around the world react. The Fed's actions ripple through the world, affecting everything from trade to your morning coffee. A stronger dollar can make imported goods cheaper, but it can also make life harder for countries that owe money in dollars. Understanding these moves helps make sense of financial news. When you hear about currency swings, you'll know why they matter and who's affected. You might hear about the dollar index. It measures the dollar's strength against other big currencies. It's like a scoreboard for the dollar's global performance. When that index rises, the dollar is gaining power globally. Investors, businesses, and even governments pay close attention to these movements. These shifts quietly shape our economic world every day. They influence jobs, prices, and the flow of money across borders, often without us noticing. That's why we're taking a closer look at what's moving the dollar and what it means for you. Whether you're a traveler, a business owner, or just someone curious about the world, understanding the dollar's journey can help you make smarter choices. Let's dive in. So, who really controls the fate of the mighty US dollar? The currency that powers the world's largest economy and influences global markets every single day. Meet the Federal Reserve, often called the Fed. It's not just any bank, it's the central bank of the United States, and it plays a crucial role in shaping the nation's financial destiny. The Fed's mission is twofold: keep prices stable so your money holds its value, and help create conditions where Americans can find good jobs. Whether you're buying groceries, investing in stocks, or searching for work, the Fed's decisions touch your daily life in ways you might not even realize. At the helm is Chair Jerome Powell, leading the Board of Governors. This group of experts debates and decides on policies that ripple through every corner of the economy, from Wall Street to Main Street. Their most powerful tool? Setting a key interest rate known as the federal funds rate. This single number influences how much you pay on your credit cards, the interest on your mortgage, and even the rates businesses get on loans to grow and hire. The Fed is designed to be independent from day-to-day politics. Its leaders rely on mountains of economic data, forecasts, and research to make tough calls, always aiming to do what's best for the economy, not just what's popular. This independence is vital. It helps build trust in the dollar, not just at home, but around the world. Investors, governments, and businesses everywhere rely on the Fed to act fairly and predictably. About 8 times a year, the Fed's leaders gather for high-stakes meetings. Their decisions can send shockwaves through financial markets, affecting everything from stock prices to the cost of borrowing money. Just last week, the Fed made headlines by cutting interest rates, a move that sent markets into a frenzy and sparked debates from New York to Tokyo. But the real drama often unfolds after the official announcement, when Fed leaders step up to the podium. Their words, hints, and even their tone can sway markets and shape expectations for months to come. Investors, analysts, and everyday Americans hang on every word, trying to read between the lines and predict what the Fed might do next. A single phrase can move billions of dollars in minutes. That's why this week and every week, the eyes of the world are fixed on the Federal Reserve, America's financial guardians, shaping the future of the dollar and the global economy. After a big Fed decision, the real action begins. This week, several Fed officials, including Chair Powell, are giving speeches. Why does it matter? Investors search these speeches for clues about future moves. A single word can send markets soaring or crashing. These speeches reveal the Fed's thinking and hint at what's next for interest rates. That's why Wall Street listens so closely. The Fed's words set the tone for the dollar and markets everywhere. How do Fed decisions move the dollar? The answer lies at the heart of global finance, where every word and action from the Federal Reserve can ripple across continents and impact economies worldwide. It's all about interest rates. When the Fed makes a move, whether it's raising or lowering rates, it sends a powerful signal to investors everywhere about the direction of the U.S. economy. When the Fed raises rates, U.S. investments become more attractive to global investors. Higher rates mean they can earn more on their money by putting it into American assets, like government bonds or stocks. Higher rates mean better returns, so investors buy dollars to invest in the U.S. This increased demand for dollars is like a magnet, pulling money from all over the world into the American financial system. More demand for dollars pushes its value up. The dollar strengthens, making it more expensive compared to other currencies, and this can affect everything from the price of imports to the cost of travel abroad. If the Fed cuts rates, the opposite happens. Dollars become less appealing, and its value can drop. Lower rates mean lower returns, so investors may look elsewhere for better opportunities. Last week, the Fed cut rates, which would usually weaken the dollar. Investors often react quickly, shifting their money to countries where they can get higher returns. But today, the dollar is holding strong. Despite the rate cut, the greenback remains resilient, surprising many market watchers. Why? Because investors are listening to Fed speeches, trying to guess if more cuts are coming. Every hint, pause, or phrase from Fed officials is analyzed for clues about the future. If officials hint that cuts are over, investors may rush back into the dollar. The mere suggestion that rates will stay steady or even rise can trigger a surge in demand for U.S. currency. It's all about anticipation. Markets move on what they think will happen next, not just what's happening now. This forward-looking mindset keeps traders on their toes. This constant guessing game is what drives the dollar's ups and downs. Every day, billions of dollars change hands based on expectations, rumors, and predictions. Even a small change in tone from the Fed can shift billions in global money. A single sentence in a press conference can send shockwaves through currency markets. That's why every Fed word matters. Journalists, analysts, and investors hang on every statement, knowing that the smallest nuance can have a huge impact. The dollar's strength today is all about what investors expect tomorrow. It's a reflection of confidence, uncertainty, and the ever-changing global landscape. It's a global seesaw, and the Fed is at the center. Every move it makes can tip the balance, affecting economies and people around the world. That's how the dollar flexes its muscles, by responding to the Fed's every move, and by shaping the financial world in ways both big and small. The dollar's value is always measured against other currencies. It's a global dance. Currencies like the euro, yen, and pound are constantly shifting in relation to the dollar. Today, the euro has slipped as investors see the U.S. outlook as stronger. The European Central Bank faces its own challenges, often moving in the opposite direction of the Fed. The Japanese yen, after hints of higher rates, is now weaker as focus returns to the Fed. The British pound is struggling with UK economic worries and high government borrowing. Each currency's movement tells a story about its country's economy and central bank decisions. The dollar's strength or weakness is always relative. This global dance shapes trade, travel, and investment every day. When the dollar leads, the world follows. That's why currency moves matter far beyond Wall Street. The dance never stops. Let's zoom in on the euro and the British pound. The euro, managed by the European Central Bank, is the world's second most traded currency. Right now, it's weaker because the U.S. economy looks more attractive to investors. Money flows to where returns are best, pushing the euro down. The British pound is also under pressure, hitting a 2-week low. UK government borrowing and economic uncertainty are making investors nervous. The Bank of England is holding off on rate cuts, adding to the pound's struggles. When local economies stumble, their currencies feel it fast. That's why the dollar looks like the safer bet for now. Currency stories are always about competition for global capital. Now, let's look at Asia-Pacific currencies. The Japanese yen, long known for low rates, got a boost from talk of hikes, but is now weaker as attention shifts to the Fed. The Chinese yuan is a bit stronger today, helped by easing US-China trade tensions and steady central bank policy. The Australian dollar, or Aussie, is up slightly after positive comments from its central bank. Even the New Zealand dollar is rising, showing how regional optimism can lift currencies together. But the dollar's strength still overshadows these moves. Global investors are focused on the Fed's next steps. Local stories matter, but the dollar sets the pace. That's why these currencies are always in motion. The Fed's words echo around the world. Every region feels the impact. With Fed speeches all week, investors are hunting for clues. They want to know, is the Fed united or divided? Will more rate cuts come? Governor Stephen Moran's speech is key. He wanted a bigger cut last time. Investors also listen for hints about the economy's health and the Fed's independence. Optimism could mean fewer cuts and a stronger dollar. Worries could mean more cuts and a weaker dollar. The Fed's independence is crucial for global trust in the dollar. All these clues shape the outlook for rates, markets, and the dollar's direction. By week's end, the financial world will have its answer until the next Fed meeting. All this financial talk affects your daily life. A strong dollar means cheaper travel abroad. Your money goes further in Europe, Japan, or the UK. Imported goods, from electronics to wine, can cost less when the dollar is strong. But if you work for a company that exports, a strong dollar can make your products pricier overseas. Your savings and investments are tied to these moves. Market swings impact your 401k and IRA. The Fed's decisions drive market stability or volatility. Even international stocks in your portfolio are affected by the dollar's strength. So paying attention to the dollar and the Fed isn't just for experts. It helps you make smarter money choices. These global shifts shape your wallet, your plans, and your future. We'll keep helping you make sense of it all.